Well, you know what, the yen has finally performed to what we talked about. I think I talked with you guys about that.
Yeah, we have.
And I tell you what, I don't know if you had a chance to listen to the Anthony interview the other day, but pretty much after Warren came out over the weekend, meaning Warren Buffett, basically discussed everything that we've been discussing for the last few years. And I thought that was a major move on his part. I thought the market understated it. I bought, I said, wow, when the gold opened a little bit higher on Sunday night, I was surprised. And then when it broke, I was really surprised. But I said, this is really good opportunities because that was a dynamic pivot. That will now go down as the Buffett pivot. And it was not just because he talked about Barrick. That's just one side of the coin, but it was really paying homage to him grasping that negative real yields are a dynamic that he's going to have to contend with and trying to understand it. So I thought it was as much bearish the dollar as it was anything else in the way that he put together his argument. So,
and the weakness in the dollar is continuing still.
Yes, yeah, I actually have ordered. I'm out now. I've had a very nice run here in the end this week, but I'm got some levels. So in the futures back at 94.53, I have my buy orders. I may be getting a little too cute here, but I'm watching the metals come off here a little bit. So interesting board right now, very interesting. And are they going to react to the bonds? Bonds are doing what the bonds are doing, and the bonds are confused. I read John Author's piece this morning. I think he needs to go back on vacation. And I'm a big John Author's fan, but yeah, I don't know. But let's get down to it. I know we have I got them up in front of me. So the Fed minutes, FOMC. I'm not really looking for much. I had a little conversation with my friend John Brady online this morning about it. I said, because there was a piece in the Wall Street Journal. I said, I don't care what the Fed tells us, by the way, because my sense of it right now is they're only concerned about jobs. As I said, they're a social justice organization. And as soon as Powell talks about through no fault of their own, how can the Fed possibly move here with, and I said, I've been optimistic. My question still remains. We come to December, unemployment is 9%, and inflation is at 6% on an annualized basis. What does the Fed do? And and that's my operative scenario that I'm playing out, which is why I've been bearish the dollar, bullish the metals, but I've been bullish the metals a long time. But I was bullish the metals against other currencies. Now it's, the complete package, especially as it's, the way it's performing against the dollar. So these are all things that we look at going forward. But now part two of the question is yield curve control. Because with the huge amount of debt that the Treasury is going to be bringing to the market, can the Fed afford to allow rates to go higher? Now you could say, well, the markets are going to take them higher. Not so fast, because if the Fed says, hey, we're shifting our buying to the long end of the curve because that's where the Treasury is bringing, and basically embarking upon yield curve control, then I would look for the euro to go to that big area that we've talked about for quite a while, the 125.50 area, which I believe is the 200-month moving average, but I will verify. Yeah, it comes in at 126.32 today. So, I mean, it's a legitimate test, and it would allow the dollar index to test that low that it made a couple of years ago because that's what we're seem to be a little bit focused, more than a little bit focused down at 88. So you'd get a test there. And I think you will see that if we see any type of the market sensing that yield control is the next tool to be taken out of the toolbox, that's what'll prompt that move. So that's the way I'm playing it, and that's the way I'm seeing it.
What do you think?
Clear? If you want more clarity, I'll give you more clarity. So pipe up. Don't be afraid.
Yeah, please, guys, if anybody wants to ask for more clarity or just ask another question, related question, please go ahead.
Yes, please. Please.
If we take out that low in the dollar index 88, 80, under 89. If we take out the low and then the euro hits at 200 month.
Yeah.
Everybody's got questions on the digital dollar that people are talking about.
Okay. All right. Let's entertain that. Okay.
Yeah.
Because when I try to have this discussion with what I believe to be reasonable people, they become very unreasonable, and I'll tell you why. Wait, hold on one second. Okay. When we talk about digital currency, let's clarify. What do we mean? Bitcoin?
Yeah. What do you guys? Are we talking about Bitcoin? Are we talking about a new form of Bitcoin? Anybody want to pipe up? Brett, you asked the question. Brett and Michael. China's Brett, who asked one of the questions, said China's sovereign currency. Okay, experiment with digital currency, but only hinted at it. So I think that it would be a form of Bitcoin or something like that, using the blockchain. Okay. That's what everybody seems to. Nobody seems to be, except for the Bitcoiners. Nobody seems to have any idea.
That's a very good question. Okay, so now let's talk about that. So if we create a digital currency, which will be created by the central banks, by the way, now will that be a negative for Bitcoin or a positive? I don't know. But it goes to my sense, and I think that's what people are hinting at on the margins here. Will the central banks create a digital currency because they have to be able to control the currency? That is part of being a sovereign nation. Now, my thought about this has been that if Russia, and I'm looking at Russia and China right now especially, if they go to some sense of digital currency, I always thought it would have a precious metal component to it, be it silver and or gold, to make it that much more desirable. Does that mean it will be 1-to-1? No, I would probably guess that it'll be a 10-to-1 ratio. So at least give people something different than what the dollar is about, and that's a big part of the question. My problem with digital currencies, and this comes right out of Larry Summers, Rogoff, and others who are pushing for digital currencies, is that it's their ability to control what you do with your money. Because if it's a digital currency, totally electronic, and they're trying to get rid of cash, then it's so much easier to get you to unlock your savings, because in that regard, it's so much easier to move to negative interest rates. So if I wanted to get a quick bump in spending, I'll take interest rates down to -5%. And it's easier to do because you can't take your money really out of the bank and stuff it in your mattress. Okay? And I'm not being conspiratorial. This is out there in the academic literature. This is what they're pushing, because what they've run into here with negative interest rates, the only reason they don't like negative interest rates is because people's reactions are, hey, I'm taking my money and putting it somewhere else, so therefore you don't get any velocity to the money, and it undermines everything that they're trying to do. So the concept of a digital currency, and they'll sell it to you in a million different ways now. They came out with some stuff with COVID going, well, cash is dirty and it spreads viruses, so we got to go to digital. But yeah, and I'm speaking from the US and the UK, but its real intent is to unlock people's, stash of hoarding of currency. And this way they will be much better, have much better control, and interest rates will become a real dominant factor by going as negative as possible. So that's how I'm looking at this. And for the Russians and the Chinese, what it does is they're avidly and aggressively working to try to circumvent the dominant role of the dollar in trade. Okay, because it allows that. Wow, metal's really broke here. Because that allows the U.S. to sanction everybody by blocking their use from the SWIFT system and other access to dollars. So in an effort to pull away from the dollars, the United States right now should stop sanctioning people because the world is more dynamic than they're planning, and people are seeking alternatives. And this is just part of what they're working on. Do I think it'll come that quick? I don't know. My technological knowledge outside of understanding some aspect of blockchain, and I've been doing some work with a group, Ninth Gear. I'm actually acting as a somewhat of a consultant. I'm not official. I don't have any official title yet, but I do aid and advise them, and they're a blockchain operation, especially in regard to foreign currency. So I am somewhat aware of this. You can look up their website. They do have a website, Ninth Gear. Some interesting people involved in it. So there's a lot to go. There's a lot going on here, but the pure digitalization, I just don't know. But everybody has a different agenda with this. Russia and China have different agendas to get away from the dollar in whatever capacity possible. And China's doing it by little steps, by the way, because they have they're taking yuan they're paying yuan for oil.
Yeah, the Shanghai oil and gold too, right?
And gold, they have a good right. So this is all in play. Can I give you a date to it? No, because the global dominant power is going to fight like mad to prevent this. Okay? It just is, because they like the role. The dollar is either an exorbitant burden or an exorbitant privilege, and they're still trying to figure it out, as they have for 49 years. So a lot to look at and take in here. A lot. There's many things that have to be developed and realized with this, but it's a good question. But I think first and foremost, from the developed world, not China per se, even though China is certainly more than a developing nation, emerging. They've already emerged. But for the U.S., it's the ability to control your money in a much more efficient capacity without losing the velocity in the banking system. Do we want to go deeper in that? Anybody?
That has so many different implications, and I'd imagine that there isn't going to be much. I can't imagine that the countries or the central banks or the top 1% of the top 1%, without sounding too conspiratorial, the powers that be are going to let that happen very easily, as you said. And what will it look like? Which leads into, I like the way that Richard Duncan, in the conversation that you and Richard Duncan had the other day, brought in the idea of creditism.
Oh, yeah, you know what? It was interesting because I wasn't really at all familiar with his work, but, you know, I've had that, I used to call it, when I used to teach classes, I'd say that we had that we don't have capitalism, we have debtism, because the way that our taxing system works, and this is, I've been mouthing this for so many years, is that because we're allowed to write down debt and write off debt and deduct debt, but yet we're being doubly taxed on dividends, how do you figure that we were a capitalist society? You know, we were rewarding debt. Borrowers
Yes.
got a lot more tax incentives than investors did. Okay, when he said that, I didn't want to go any further with him, but I really was interested in that because I have viewed that the same way too, because of the way the taxing body works. So very interesting discussion on his part. And I'm glad we had it, but I think there's a lot of truth to that. But that's because of the Keynesian nature. And it's a bastardization of Keynes. By the way, I don't mean to diminish Keynes, because the fact that we live on a society where we keep bringing demand forward, and this is why, if I'm not trying to be pedantic here, but I'm trying to answer the question in its entirety, why Lacey Hunt and Rosenberg feel that we're going into deflation, because you can't keep bringing this forward. Where I'm not so certain of that, because, you know, I don't think we're going into deflation, because I think the central banks will just go to any extreme possible to prevent that deflation from setting in, because of the disaster it would create. So where I agree totally with Lacey Hunt that we have embarked on this, and that's why we have credit cards, by the way. Not only for banks to make more money, which once they figured out how to recycle all those petrodollars with the mass issuance of credit cards to everyone and anybody, and then coming up with a scoring system so that they could bleed you while they were trying to find a way to put those deposits to work. We just keep bringing demand forward. That's what we do. And that's what the Fed is ensured, that we'll keep bringing this forward. And what happens when you just run out of bringing forward? You know, go back to the cash for clunkers back in the Obama administration. It worked for about 4 months, and then everybody who needed a car, wanted a car, bought one, and then there was nobody left. So it was a classic example of that. So I think Richard Duncan was dead right on target. And this seems to be an albatross that continues around the neck of the system we have. And in that regard, we are debtism, or what did he call it?
Creditism. Creditism, same way that you're putting it.
Yeah, right.
If they keep, as long as they keep moving it forward, they keep pushing debt forward. They keep pushing debt forward. Isn't that I mean, that's the crux of the MMT crowd, right? Just keep creating more money, keep pushing the debt forward. Then they'll continue to continue to invent asset classes that are 10, 15, 20 steps removed from any real asset.
Well, in some regard, yes. But don't forget the MMT in its theory, as I understand it, and I've been forced to read more on it than I've done, but it's based that it does depend upon a responsible electorate, because once inflation starts to creep in, the electorate will force through their electoral wisdom, they will bring forth a Congress or administration that will raise taxes and then act to curb the inflation. I mean, that's embedded in their thinking. Now, We've gone down partially this path without invoking that whatsoever, because, you know, at what point, because they'd say, well, you don't have any inflation, so keep going, keep going. You know what? To me, if you are in the classic liberal tradition, the tradition of what I grew up in, you know, anti-war, pro-civil rights, you cannot be in favor of MMT, because MMT, by its very nature, allows governments to fight wars with no sense of fiscal responsibility. Now, you could say, well, we fought wars anyway. Of course, Vietnam, two Iraq, two Gulf wars, were, you know, spending, you know, just ridiculous amounts of money. And I would certainly agree to you. But at some point, there was responsibility. But now, if I can run the printing press in order to pay for it, well, full speed ahead, and I can pay for anything. I'm back to Lyndon Johnson's guns and butter. I'll pay for anything. You want social programs? Fine. But on the same way, I'm going to spend a shitload of money on military because I can do that.
Oof, what a dystopian view of the world.
I'm sorry. And you know, that is not me. I don't get up in the morning, but when I take this apart, why not? This is a politician's dream. This is Nixon's. We're all Keynesians now. There's no limit to what I can do, and the financial ramifications. Well, you know, you depend upon a responsible electorate, and I just don't see it. I don't see it. So, I still have a lot to learn about it, but it just, that's what my first fatal flaw with it is, and I mean, I can go deeper, but from a political economic standpoint, that's where I really struggle with where they're going here.
Can we switch? I want to get into a little bit of what Randy's second question was,
Okay.
which is to comment or update on U.S.-China relations with the potentially severed trade deal from the coronavirus implications and U.S. pressure on China tech and e-commerce. How is China responding and combating?
Okay. So it's right now, I think the Chinese are in a situation where they would like to kind of, no pun intended, bide their time. They're biding their time.
That's a good one.
That'd be my headline in the New
I
York.
got to write that pun down.
That'd be my headline in the New York Post. Biding time, and that's what the Chinese seem to be doing until they get a sense of is there going to be a change in administration? Now we've talked about the trade. Now I will say this, that I think I am being proven right on my view that Hong Kong's a sideshow and Taiwan is the most significant, because the Chinese have started making noise about Taiwan anytime they want to ruffle people's feathers. Now on the trade issue, which is what we're looking at, right? Phase one, the Chinese have ramped up ag imports, by the way. But I don't think it's because they're trying to help Trump. I think they're very worried that, number one, if you look at the grains, actually made some interesting moves over the last week and a half or so. And the numbers of Chinese imports are dramatic. And that's because the Chinese need grain. I mean, there was an article today in the South China Morning Post about going out to 2025 with that China will be in a supply gap. I don't know how you can make that determination. You read those, but I think right now they're a little bit nervous that the global wheat crop is not going to be as big, and they cannot afford to get caught off here. And with the dollar coming down, well, just like they did with Brazil, they bought all the Brazil crop. Watch what they do here with the U.S. because they cannot afford to be caught short of grain. And they have to get out in front of everybody else. They can't wait for the rest of the world to decide whether they need it or not.
I haven't looked at a bean chart until just now. It's they've had a big rally in the last week.
It is. Yesterday's move was quite interesting. Getting all on top of this because it's getting interesting. The wheat put it, and even the corn. So you got some movements here. I don't know where it's going to go, but that fits my scenario. In fact, I just bought some more ADM this morning. So I only buy into breaks, trying to build out this position because I think these companies are very well situated for this. So it's what I'm watching and it's what I'm looking at. I will continue down that road. But I think the weaker dollar, bodes well. And believe me, I think, the Navarro Wilbur Ross team screwed up not to say that they were, I give Lighthizer the credit, not that they were wrong for dealing with China, but I thought it was the most ill-conceived and ill-timed effort because when they started going down the tariffs, it was right when the Brazilian grain crop was coming in, and it was an enormous crop, and it gave the Chinese a certainly ready and available alternative. It was just, to me, really stupid, but I think it cost what in financial terms we would, or Wall Street terms, we would call goodwill, the massive amount of marketing that the American farmers through the USDA has done to bring China on as a customer for the last 40 years has been phenomenal. And I think that they hurt it badly with their ill-conceived and ill-timed tariffs. But that's just my opinion. And I think Trump is getting kind of lucky here that global grain crops I think are going to come in under than what others have anticipated for certain reasons, weather, droughts in certain areas. And the Chinese are really afraid of being caught short. So that kind of sums up my view. But again, when the Chinese really want to ramp up tension, I think Taiwan becomes the Hong Kong, again, as I say, is a sideshow. Taiwan is much more significant.
They want to ramp up tensions. What do you see the next step that China would take is?
Just all types of pressure on, excuse me, 1 second. I'm going to mute you for 1 minute. So
Sure.
Hold on. Yes.
You guys don't forget to follow. Oh, okay, yeah. And Jesse, I'm going to get to that question too about Israel and the Sauds. You guys, if you have any questions or you want to have any discussion with Ira, please just let me know. Unmute, jump in. The S&P's had a nice breakdown to 71, so right to our target level. Gold also stopped right in our target level. I'm not short gold; I am short SPOOs. But gold did stop nicely. That's a good low in gold. If they take out $20, then or $2,000, then we can start looking for the 70s. Now the S&P, as far as the S&P, we've got to take out. We got to take out 70. We start taking out 70. Then next target below is going to be 61, 63. I've already got bids in at 63.5. In front of the 63 target. If we start working under 61, I might start getting a little bit more aggressive and sell. All right, now they're running stops in the gold.
Okay, sorry.
No, that's okay. That was good. Thanks.
So now the metals are on a significant break here.
Yeah,
I'm
no
certainly
kidding.
expecting the dollar. I don't know what came out here to get everybody's. I mean, this is a significant break going on here. The silver already has a $1.30, almost $1.40 range since the opening, the pit opening. Interesting. Interesting. Go ahead.
Euro's coming off a little bit, maybe.
Yeah. Yep. Yeah, I might get filled. I have my yen orders in, and maybe I'm going to get those. Maybe I'm going to get those suckers. I hope so. Wait a minute. Where did that happen? Hold on. I'm really screwed up here.
Did you get filled?
No. I wound up short some Italian, and I don't understand why, but okay, worked out because as the euro breaks, where it comes off, they start selling it. I mean, it's very interesting to watch the world. So with China, if they want to ramp up tensions, I think they would saber rattle around Taiwan through jawboning articles in the media. That's where I would look if they're really desirous of creating some issues in the world, because I think that's where the United States has a lot of susceptibility. So, but that's my view.
It'll be interesting to see what happens in the region, and if I can see why it would be why Hong Kong would just be the sideshow and China or Taiwan would be the.
Yeah, because Taiwan's the real issue, and the United States, all they can fall back on is the treaty that was signed when in the 80s, talking about mutual respect and what was going to be promised up until 2047. There's a lot of things, but the United States has a treaty with, and that's a critical. No, not that. No, thank you. So that's the issue, and they were going to have to wait to see what the Biden. I'll be interested to see who he has on his foreign policy team. There was an article this week, yesterday, from Ben Rhodes, who I really am not a fan of. I think he's arrogant and not all that impressed. But he was in the Obama national security teams, and he had a fairly long article in Foreign Affairs. Now I read Foreign Affairs, not like I used to, but I get it online. because that's where policy people, and in fact, I was discussing with my son, who's really very, very far more astute because he's involved in it on the foreign policy aspect. And and we agreed, because Foreign Policy is a silly magazine for the most part. Project Syndicate does put out some good stuff at times, but nothing. There people there just write too much to be relevant. But Foreign Affairs is where policymakers go to publicly think and to get feedback. So that's why I read it. So Ben Rhodes, when I read it, I said to him, I said, it seems to me like that was his job interview. And a lot of times you'll see that who's positioning themselves for the possible next administration by the articles that do come out there. Like Larry Summers will have an article places, and he is desperately trying to become the next Fed chairman, by the way, because he was passed over in 2013. But I don't believe there's a chance in hell. It would have to be a major compromise. He's been trying to position himself with the Biden group. You know, he is one of the deans of the Democratic economic policy makers, but Lizzie Warren holds him responsible for so much of what happened with the great financial crisis and the fact that he didn't pay a price. She, in my mind, and I think it was pretty right, and I was willing to make a significant wager with somebody who said, oh, Larry Summers in 2013 would be the Fed chair. And I said, not a chance in the world, because Elizabeth Warren and Sherrod Brown and Vetters, a Republican from Louisiana, were not going to let that happen. And it didn't happen. So you got Janet Yellen. And everybody, oh, Summers. Nope. And I don't believe it's going to happen this time either. So just my sense.
I'm going to have to start paying attention to
yeah,
foreign affairs.
These are going to become. So I don't know what that foreign policy team is going to look like. Will be interesting. Then, of course, supposedly Prime Minister Abe in Japan is taken sick. And I was teasing my son, because my son, go out and support a Harris. Nobody sends me a check, but he's got my son's book is coming out this week or next week. It's an English biography. It's a English language biography of Prime Minister Abe. Not
What's it
authorized. It's called Iconoclast. And the author is Tobias Harris. I told him, I was laughing. I said, gee, it's amazing what a publisher what extremes will, in order to sell your book. They're gonna, because supposedly Abe is really sick. That he was coughing up blood. I don't know. It's not confirmed. That's what the South China Morning Post had an article. So we'll see. But
keep an eye on the yen, and I think we'll have a pretty good
idea. I'm not. You know what? I thought about that, man, and I don't know. That's where I wanted to go to, and then I said, do I really want to go there? Because those are not the kind of things. It's like buying gold on the outbreak of war. I'd be a little suspect about that.
Yeah, that's true. Hey, all right. So Robert's got a couple of interesting questions.
Yes.
One of them is, and I think they can probably bleed into one another if I'm reading them correctly. Where is it? Is it all right? So, and we kind of addressed this. The recent volatility in metals and bonds, a precursor to volatility in the equity markets, or do we live in a Fed-induced liquidity environment that does not allow markets to dip any longer? And I think we talked about that.
Yeah, we've covered that, Robert. And you know, I always love your questions.
Yes, we did already, Ira. So no need to comment.
Part. Yeah.
No. But Robert, let's talk about that, because what we're not hearing about, you know, I know volatility has been squeezed quite a bit, but prior to the onset of COVID, we had discussed this many times about that short vol strategy was a moneymaker for a lot of the funds. You know, Bill Gross in 2017 talked about it. You really look at some of the risk parity trades, Bridgewater and others, that short vol strategy was a way to generate, as you know, some beta. And I always thought it's a ridiculous strategy. And that's who got carried out and why the Fed had to get as aggressive, I think, in March and April, because the short vol strategies blew up. And the thing is, with vol sellers, when things turn against you, it's an expensive way to trade once vol explodes, and you have to come up with a lot more cash. And that's what was going on. So the question is a very good question. And I just don't see them returning to this, what's the word, trading idea at this time. I think they got their hands burned. I think some have. Powell's falling. I think just because we return to almost a 2013 mindset when gold was at 1630, 40, and I was on with Watchdog USA, and I said, look it, because people were going, well, why is gold stopped here? Da, da, da. If the markets believe that the central authorities, meaning the Fed, the Treasury, banks, have got this under control, which is what the equity markets are portending, then it makes sense to sell vol because, you know, that's that strategy. Now, the gold tells me that's anything but the case because that's not what happened. You know, gold was a good weather vane because you could see it start to slip as the equity markets perform. Now they're going together. So that was Buffett's point, by the way, because Buffett says you better own something besides bonds, which is why I found his pivot so interesting and the timing of it so very interesting. So, oops. Hold on one second.
Robert, what did you want to follow that up with?
Yeah, go ahead, Robert.
Ira, it's a
Yes.
slightly different question, but
Yep.
it has to do with a dollar. You know, with the EU bonds out there in the public, how long will they tolerate the weaker dollar? I know Christine is not Mario Draghi,
Yep.
and they are not trying to talk the euro down, but it's going to be a point where they will say, hey, US, you guys were talking about the currencies as a mother of all manipulation, and guess what? That's just my observation and a question. You know, how long do you think before Europeans will say, US, you're lowering your dollar too aggressively?
Yeah, you know what? It's a fair point, Robert, but I would argue back at this time, that's why that 125 area on the euro, 126, which is the 200-month moving average, I think we've been up there back in 2018, in the first part of the year. So really, I know last week Project Syndicate had several pieces, one by Barry Eichengreen, who I like, talking about the sensationalism of the dollar sell-off, and he was taking it to task going, it's no big deal. And that's the way I view it. You know, markets are mean reverting. The dollar could go lower. The dollar should go lower because everything the Fed is doing pushes the dollar lower. The longer you stay at negative real yields, the lower the dollar should go. Now, you could push back at me and say, well, you know, real yields in Germany and Europe are ridiculously low too. Yes, but they've been hit with a little bit of good news from a market standpoint, which is that as I call the Schweibel pivot in May, when, they went to a harmonized debt instrument, which gave the world some confidence. And more importantly, I viewed the existential breakup of the euro from going from a 40% probability down to a 10% probability. And I think that's a big reason why the euro is taking on some new life here, because people who were shying away from it have now been forced to come back to it. And this is not a trade issue. Again, I stress that over and over again. That's where I took Trump to task when he started talking about a stronger dollar. And I go, no, you don't want to talk about it, because this is not trade. This is a financial move. Everything the Fed has done that could have possibly weakened the dollar without them ever saying it, because don't forget, the Fed has no mandate, no role on dollar policy. It's supposed to be the U.S. Treasury, but they can certainly embark upon policies. And I think that's what Robert says. They have embarked upon policies, but so has everybody else. Everybody else in the world. I mean, when all you did was have to watch what the RBNZ did with the Kiwi, and you see the Aussie Kiwi, which I love to watch, went and made, got rallied even more, which could not have made and will not make the Aussies very happy. So everybody, the Swiss, it's all about, they use monetary policy to weaken their currencies, no question about it. I don't think that the euro is at any level that will impact anything negatively. Where that is, I can't tell you. But at this point, minimus. It won't have a deflationary impact. It's just the market's, correcting some of its recent outcomes. I don't view this as a very significant move yet. I'll tell you when I do, but it's not yet. This is just market. But as Eichengreen talks about, the market gets bent out of shape. But that was coming from a market, because when I initially turned bearish the dollar back in late May, I mean, I had one argument after another, which I relished those discussions. They were really good discussions. You can go back and read the blog where people were going, no, because they were following the Raoul Paul view that there's a dollar shortage and the dollar is going to keep going higher. And I said, no, you're missing the point from my perspective. Once we saw the Schweibel pivot, you know what? It was, I look back at my last couple blogs from mid-June, and I left off with some very good points, because we got the metal rally that I was looking for. We certainly got a sell-off in the dollar. And I think it was the sell-off in the dollar that rocketed the metals that much higher. So I don't think we're in any type of juncture where Europe will, because the world needs a weaker dollar, and people have to step back and think about that. So I would watch for any type of words out of the G7 or G20. But with the debt overhang, especially for the emerging markets, a weaker dollar is badly needed on the international scene. So,
that's a very good point, Ira. My relatives in Poland are reminding me that. So thank you for your answer.
Yeah. It's right now the market's telling me that that's right. I will. Me, when I see a shift, it doesn't take me long to say, "Wow, this viewpoint is old and stale. We're seeing something new here." But I'm just not seeing it, and I kind of think Lagarde likes the stronger dollar. I mean, the stronger euro. I'm sorry, misspoke. That she likes the stronger euro because it gives a little more credibility to the policies she's taken on.
The implications of that are very deep, especially with Trump hammering for a weaker dollar earlier on.
Yeah, and then he shifted.
Yes.
Me, and I called him out on it. So I'm not coming to it lately. I called him out on it. I thought, as I said, as I wrote that piece, I reiterated the famous work by Keynes. It's only a pamphlet. Anybody can go read it. It's very easy to read. The Economic Consequences of Winston Churchill. When Churchill put Britain back on the gold standard in 1925, And again, I'm not doing this to be pedantic. So if you roll your eyes, I could see everybody rolling. Why is he bringing this up? Because it gives you the contextual background that we've been here before. Understand it. And a stronger dollar in the way that Trump put it out there back in May would have been absolutely of dire consequences. The world did not need a stronger dollar. In fact, it needed the exact opposite. So we do have historical precedents for that.
With the we've come back to this, talk about context and nuance. We've come back to this so often with the in so many conversations, but gold has not been a hedge against inflation for a long time. It's a hedge against the central banks losing control of the monetary policy. So
right.
So what's Buffett's pivot saying about the Fed and the weakness in the dollar, if anything at all?
Well, what Buffett's pivot is of course looking to gold, and it makes him now concerned about what monetary policy may ultimately do here, and especially in the short to near term. And he had to turn away. Look at, he sold banks. So if you're selling banks, you must believe that you're going to see some yield curve control. Even though I would take him to task for the banks that he owned. I think Bank of America and Wells Fargo. Wells Fargo, I think, is a criminal enterprise for what they did with the identity theft, because that's what it was when they opened accounts because they had people's information without their approval. That's identity theft by any definition. Bank of America, I just think, is a hellacious bank, and I say that because I've seen what they've done when they bought back in when they bought ABN AMRO, when they wound up with all those branches here, which were really great banks, and they've run them into the ground. They're just big. They're big, and they feed you to death. Their research, I know people like to tout, because of the Merrill Lynch arm of it. Sorry, I'm massively underwhelmed. I always like J.P. Morgan because I think Jamie Dimon is legitimately a very good banker in the traditional standards of what a good banker was. And I don't see any of the other banks. Although when Wells Fargo was run by, what's his name, Kukovic, I thought that they were a much better bank. Now they're, I think, pathetic. And the fact that Buffett stayed and continues to stay so long with them, he may be a mercenary as far as money, but I'm just not seeing it. And now we are truly turning, if you get yield curve control, you saw last week the banks got big bids as soon as that curve began to steepen after those bad inflation data and the miserable 30-year auction. So the banks went right up, even though the move was 6 or 7 basis points, which down at these levels, but you see how short-lived it's been, right?
Yeah, exactly.
So that's how desperate the market is in the search for yield. You saw it right there.
That's exactly right.
Anything else we want to discuss?
There was one last question, if you have time.
Sure. Yep.
The recent meetings, and this has got Jesse. This is from Jesse. And
Yes.
to me, this is
Jesse
very
Livermore. Is that
no, Jesse? Jesse Livermore's great-great-grandson.
Okay.
The recent meetings between Israel and Saudi Arabia, does this recent agreement hold significance, and what might it mean for the broader region? Should energy traders care, or other markets?
Okay. Did Jesse ask me the question last week about my views on Netanyahu?
Yeah, no, I don't. That may have been Jesse.
No, it wasn't Jesse.
Okay, no.
Okay. All right. So, okay. I think this has very broad implications. Although, again, we're going to wait for the Biden team, because if he brings in the same team from the Mideast, which pissed Netanyahu and the Israelis off, because all the way to the end, to Obama's final days, you had Samantha Power, I think was Samantha Powers, was at the UN, and they went down that road of not of abstaining on a very anti-Israel resolution. So we'll have to see who comes about. But it's a very good question, Jesse. And from the way that I look at that perspective, I've been a believer that the United States and everybody else should have stepped back from this region 30 years ago. And I think you would have actually gotten the Israelis and the Palestinians to make a genuine peace. That less involvement would have created a better situation. They didn't go that route. Everybody has sticks their noses in. But I think what you're seeing here is, and I read a lot of the Palestinian responses to what the UAE did, is that they, as they called it, the stab in the back. For all of those who don't know history, that's also what the Nazi Party basically built their foreign policy on, was that the Paris Accord was the stabbing in the back by the Weimar Republicans. They stabbed the German army in the back. So that's what the allusions were to. And they were very boisterous. The Palestinians have been stabbed in the back. But what some wiser Palestinian voices said, and one was Mohammed Dalan, who is on the outs. Abbas hates him, so he has to work actually out of the UAE. And some people say that he was greatly responsible for putting this together more than anybody else. Because Dalan has been Mohammed Dalan has been an interesting person over the last 30 years, from being in an Israeli jail to being one of the, to being accused of being a conspirator against. So he's an interesting person. And he definitely has done a lot of business with different Israeli concerns. But what the Palestinians are waking up to is, you know what? Everybody's starting to lose interest in them, except for the Europeans and and some liberal forces in the U.S. who view this still as an anti-colonial movement from the 60s and 70s. But most people are, you know what? The Saudis, the Israelis are not a threat to the Arab states. Never have been. All they do is really kind of want to be left alone and come to some type of agreement and stop being harassed and stop being terrorized. So as they keep slicing off pieces, and the UAE is no small favor. Now, supposedly there's 4 more Arab states from the Sudan on who are going to fall in and sign peace treaties very shortly. We'll see. I don't know. That's just conjecture. But I think for the Palestinians, they have to wake up and go, you know what? Once people start losing interest and there's no money flows, because all the money flows has done is hurt the Palestinian people, because it supported the corruption. And I can go back to the 80s when I did a lot of business with Swiss banks. And I had a lot of friends who were traders, and they would tell me back then how much money Arafat controlled. And I said, how do you know that? And they said, because we're busy moving it. It's no secret. Anybody who's in the Swiss banking community, the money was all stashed in Switzerland. So you've seen, as I've referred to Arafat, he's the Jesse Jackson of the Palestinian world, because as Jesse would shake down one business after another by going to threaten demonstrations. Jesse got phenomenal payoffs from large American corporations, none better than Budweiser, by the way. That Arafat would go from country to country, threatening them with terrorist acts. So he was being bought off continually and amassed quite a fortune. He still has that fortune. His wife was always living in Paris in a very expensive lifestyle. So it has done the Palestinian people no benefit, and we'll see where this goes. And especially, the situation we had in Lebanon and what Hezbollah does. And Hezbollah has been actually pretty quiet, as Hamas has been quiet. So it's it'll be hard to answer. The thing though that will stir the pot for the Palestinians, of course, will be Erdogan and the Turks, because as he gets more pressure, look for him to stir that pot, because that's been the playbook in the Arab world. And the Turks have certainly helped promote that at times, as you saw that with that boat lift to try to break the blockade of Gaza years ago. So it's a good question, and it'll depend upon who you see Biden put into his, who he takes on as his key Mideast advisors. Anything else you want to ask about that, Jesse? Does that?
Jess, anything follow up? No, I don't think so.
And with that too, Iran being on the outs right now, and they feel that they're being, that this is why this is being done, because they've become the public enemy number one for the Sunni Arab states, and even for the for some Shiites who are looking for some to calm the world, to calm their world and end so much of the strife that these people have to live with. They have the ability to raise tensions, just like the Chinese have the ability to raise tensions with Taiwan. The Iranians and the Hamas and Hezbollah have the ability to raise tensions when they want to. Is it in their interest? We'll wait and see. But they're waiting to see who comes to the fore in the United States too. So I think for the next 2 or 3 months, there's some quiet that'll settle in, because everybody kind of wants to. They'll be working in the background to see, and to put in place either what if they have to deal with Trump for 4 more years, or there's a change of administrations in the U.S. And also, we're going to want to hear, although it's gone quiet, about what actually happened in Beirut. It's a big part of this story.
Yeah, it's been very quiet.
Yeah, very eerily, to me, eerily quiet. Eerily quiet. And it's amazing that they're not pushing more on Aoun to push for an international commission to investigate. So let's see. Yeah, let's see.
As we come closer to the election, do you think we're going to start to see volatility pick up in the equities, or do you think we're going to see some?
I think there's no question, because the polls will reflect it, and the polls, as you see, can the polls have been more wrong in 2016? And you know what? And now CNN came out with a poll yesterday. I guess I will tell you this: I do not watch these shows. I don't even have CNBC on. I get better news if I sat and listened to this room all day. I would get better financial information than I would get anywhere else.
Yeah.
I read Bloomberg. I just canceled my FT. It ran out, and I've been so angry at them, the way that I, as a 35-year subscriber, have been treated and the way they've handled it. So I'm trying to rebuild. But I have Bloomberg, and I have so many people who send me stuff, up-to-date stuff, and I go to Forex Factory. So I'm always reading. I never stop, as you know, Maddie, more than anybody, just how much this takes to do this. So we are, I'm not doing less, I'm doing more because of it. And I'll see, I'm trying to engage with the FT to get them to fess up for some of the wrongs that they did as far as my subscription over the years and why I should be given a few extra years of information. But the polls are the ruckusness in the polls will create some of that volatility. And we're still driven by these algorithms.
Oh, sure we are.
You saw it last week in the way as soon as the long end of the curve, which has nothing to do, which is when the curve steepened, the equity markets actually performed right. It's bullish, and I view it as bullish to 6 to 8 months is from my study of duration when yield curves start to steepen. But all they were doing was concentrating on the rise of yields on the long end, and they hammered gold. The dollar was weaker, but it did rally back for a day and a half. And then by the end of the week, the dollar rally was over. And I thought the dollar closed very weak. So the movement so far this week in selling of dollars doesn't surprise me. So yes, the volatility will pick up after Labor Day. We've had a pretty volatile August. The volumes have been down, but interesting. And we're going to continue to pay attention to these yield curves and everything that revolves around them.
We said it last time. We live in we say it every week. We live in such interesting times that there's, oh my gosh, there are so many different scenarios that can play out. So many different things that we touched on today, and all of them, I think, is makes a case for stronger gold, stronger silver.
Yeah.
Where the long end of the curve is going is going to be really interesting, especially if we start to head into yield curve control.
Well, and I'll tell you this, I have to start paying attention to it too. We're going to have to watch the amount of silver deliveries that start to take place too. We have a September. Now, the most active gold contract, of course, is December. October's always been an under, it's not where the action takes place. The trading action is in the December. You've had some of these premiums from spot to December crushed pretty good. Let's see. I'm looking at OCT now. That premium's running about $8, which is traditionally high, being where interest rates are, because that's what it's a function of that. But something that we're going to pay attention to as we come into what's the date today? The 18th. So deliveries in the SEB Silver start probably August 29th or whatever. Somewhere the 30th is probably first notice day. I don't have the calendar up in front of me. So we'll watch those too. But a lot of stuff on our plates.
A lot of stuff to keep up on. Yeah, absolutely. And a lot of stuff.
Let me raise. All you do is my individual stocks, as I share with people, when I've been building a portfolio. I'm not in the tech outside of core holding in Twitter. I've held only because I wanted to hold it up to the election to see how much business that they were able to generate. But I've been building, in mining stocks and ag stocks. Now the ag stocks are a little under pressure today, but I am because I think that the Fed is going to be successful in creating some illusion of inflation, and the markets are going to respond to that. And the weakness of the dollar will be good for commodity prices. So as I've been watching between, my favorite right now is watching the Bloomberg Commodity Index. And that's BCOM on CQG, look at that chart and you'll go, interesting. So those are where I'm parking myself for the moment. And that portfolio is done fairly nicely throughout this. It doesn't have the pizzazz, but I'm not into pizzazz. I'm into performance. And if I can make 20, 30% on these ag stocks and mining stocks, I'll have viewed it as a very good trade.
Ooh, the Bloomberg Commodity Index filled that gap going back into March.
Yeah, nice chart, isn't it?
Oh, it sure is. Oh,
It's
that's
we
strong.
have to pay attention to, and again, you have to go back to mid-January, because when the world, and this is where I'll take people to task on the dollar, because if we go back to January, the dollar was starting to weaken in anticipation of higher commodity prices. So, we were at, let's see, we closed the year on December 31st at 112.10, softened a little bit, but the dollar itself was holding up pretty well. And then all of a sudden we get the COVID and you see a significant drop. Between February, March, and April, the dollar rallies, and that's what forced the Fed, of course, to be even more aggressive than I think they initially wanted to be. Things to watch. And that's why, and if you look in anticipation of that, let's go back to the Bloomberg Commodity Index, and we see that in January, that was up at 81. Let's see. Yep, it closed out at 81.36 at the end of the year. And then all of a sudden, the COVID sets in, and you see the damage that gets done. So
that really is a great look.
Yep. So pay attention. It's just some of the things I'm paying attention to. And the dollar weakness has more than a little to do with that, by the way. So we'll go back and entertain that and go, well, what are they getting for it? That's why the world ought not to be too concerned. Don't look at the dollar as a trade issue. The media keeps reporting it. It's worthless reporting, by the way. Worthless. This is not a trade. This is a finance issue. This is not a trade issue.
I wrote that down. That's something I've got to look up.
Okay, so that's where I'm leaving you off at. I'll take one more question. Otherwise,
Jesse's got a, hold on, let's see. Selfish question, he writes. 10 years from now, I wanted to be 1/10 this now.
what is? I'm sorry.
I think he already answered it. He wrote, in 10 years from now, if I wanted to be 1/10 as knowledgeable as Ira, would you say I should be reading The Economist, FT, Bloomberg? Well, not FT anymore.
Well, yes, it's still quality. That's my personal,
Yeah.
I got an issue with them. I can get the sources. All of the above.
All of the above, along with South China Morning Post, Forex Factory.
Yeah, you just dance around. You'll find, you know what? And you'll learn. You'll be able to. The best thing about it, who put that forth?
Jesse.
Jesse. So Jesse, here's what I would say to you, is that as you read more, your filter will get that much better, and you can get rid of the BS far faster, so you don't get, and that makes your reading much more efficient.
Oh, that's a great point, Ira. My reading has become much more efficient over the course of the last year and a half since we've been having these discussions as well. I don't spend so much time floating down different rabbit holes that wind up with a very weak conclusion, a very weak thesis with a strong conclusion, which I think we see all over the place. Everybody's making these big, bold statements, but when you go through whatever it is that whatever thesis or logical argument that they're using, it's very weak. So it's really, these conversations have really helped me an awful lot.
Exactly. I think that's the point that needs to be made, because it does. It makes, when I used to have interns or, I had people who work for me, and I would hope to get them to a point where they would really be able to read stuff, so I wouldn't have to go do this, and they would just bring me the stories, but there was only one or two people I had through all the years who I trusted enough then I didn't have to go back and look and redo what they did. Okay, that's just a fact. So, but as you read more and more and comprehend more and more, your efficiency increases dramatically. That's the payback to all the work, by the way.
My son, my 15-year-old son, Gabriel, who's a sophomore at Brother Rice High School, starting a sophomore year, has been sitting with me for the last month or so, learning how to trade. And he loves our conversations, So he's going to be full of questions when we're finished. And later on, he and I will sit around the dinner table while the girls talk about, who was at the pool or Irish dance this or, ballet dance this or whatever. Gabriel and I will be sitting around talking about the Schweible pivot and what's the Buffett pivot, Dad? And what do you mean by what's foreign affairs? Where can I find that? He'll be asking me all of these questions.
Oh, yeah. Foreign affairs, you can get it online. It's one of the reasons I go to Barnes and Nobles, because I like to pick it up there so I can have it as a hard, because by the time I do my annotations, and I still carry, I always have a yellow marker available for whatever I read, or a pen, because I have to circle back. And now that I'm getting the house ready to sell and I'm going through old things that I've saved, and I go, oh, why did I save this? And I'm reading articles, that I thought had great wisdom in them. So now I'm getting rid of them, but I've held them for a number of years, and they're all annotated out. And
are you guys going to leave Chicago for good? Or are you going to keep a place around the city?
Well, exactly. Where do you think I should head to?
Arizona?
No. In the city, I'm talking. I'm not buying a place in the city.
Oh no, nowhere. Absolutely, there's no place I think you can live in Illinois anymore.
You know what? You'll see me at Rainbow Beach in an Airstream. That's my answer to everybody.
That's great. Rainbow Beach. The best, by the way, the best beach in the city that nobody knows about is 71st Street at South Shore Country Club.
Yeah, I know that beach.
Nobody goes to that beach, and it's a very, very safe beach to go to.
You know what? I have to tell you something. When I would run south, because when I would do my running along the lake, that was my turnaround point. And
holy cow.
Nobody ever bothered me. Nobody.
No. Nor would they.
There were a lot of black runners out there, and then of course there were, University of Chicago people who were running, but there were, some of the greatest, I would talk to people, it was great. I never, it's like I tell people when I first started working even when I was at the Exchange in 1977, I was still reffing high school basketball for a while. And people said, I said, you don't understand. I liked reffing in the inner city far more than I did in the suburbs. Because in the suburbs, I never made a good call. In the inner city, the coaches had such great control of the kids. And parents would come, yeah, I don't agree with your call. People were humans. In the suburbs, I hated it. I hated it.
Oh, that's a great point. That's a really interesting observation.
Hated it. I can't tell you how much I hated it. Because you were the worst. I don't know if you know what Angel Guardian is.
No. It's
an orphanage that's run by Catholic Charities up on by Devon and Ridge in Rogers Park. And there was a lawyers league on Sunday morning, but they paid good money at the time. So I used to ref. And I knew, and the worst thing was I knew a few of the guys, but there was, so, I could work 3 or 4 games. That was the absolute worst. Reffing for lawyers? Are you kidding? That taught me how to chair disciplinary committees at the CME. Because, wow, you want to talk about a no-win situation? Go ref a lawyers basketball game.
God, that's hilarious. I never thought of that. That's very funny. That would not be any fun.
Oh no, everything was an argument.
All right, I'm going to ask you. I don't know why I've always. I didn't realize that you ran all the way down to 71st Street, but where were you? I don't know why I've always pictured the you running around the old S curve, coming down like past just north of on Lakeshore Drive, north of Navy Pier.
Yeah,
where all the boats tie up. That's why I always picture you coming up with the S&P bond spread.
No, I was at North Avenue.
North Avenue. I love that.
There was a phone, a public phone, right there at North Avenue, in the lake, and I stopped at the phone and called them collect.
It's even better.
I didn't have any money. I don't lose the concept.
It's beautiful.
I was surprised he took my call. Don't forget it's 1988 or 89 or something. So, the public payphones were still a thing.
Oh my Lord, still a thing. That was a main mode of communication for anybody running along the beach.
Yes, it was.
That's great. Holy cow. Coming up with this, the S&P bond spread and the equity bond spreads that morphed into all kinds of
really good barometers. Really
oh my
good
God! Yes, barometer. Yes, that's a word. That's a great word. A great barometer. So you're looking at the miners. We're looking at the metals. We're looking at miners. We're looking at ABN AMRO and commodity stocks. And nothing with the yield curve right now. We're looking for weakness, continued weakness in the dollar, strength in the euro, yen.
Yep.
And equities to kind of remain quiet, but north.
Yeah. You know what? I think that's how the board sets up here pretty well.
It's a great conversation, Ira. Thank you so much again for spending your time with us.
Are you kidding? Really? You guys ask the questions. We all learn and do better. As I said, I go to Judd's room and I'll sit and that's my background noise now. If nothing's been talking, I should really. So if you would send me, are you guys Zooming like this every day?
We're either in Discord or Zoom. Yeah.
Okay. All right.
One or the other.
If you send me in the morning, I just use it for background because usually if there's breaking news, you guys are reporting it out anyway, and I'll hear some discussions and I might pipe in every once in a while, but it's just, I might not click on it all, but this is where you ferret out really good ideas. And I have to tell you, I think we've done pretty well over the time period.
Oh, no doubt. I've learned more. Again, like I said earlier, I've learned more from you. I've learned more from you in my career than any one person about anything macro.
Yeah, but it's only matters if we can make them into profitable outcomes, or even if they don't turn profitable, but they had some genuine thinking to them, and we ferreted out a better trade, or we were prevented from making a shit trade. Because, again, as when I would tell people, I said, if I charge money, it's not always what you make, it's what you save.
And that's another huge aspect of trading that just isn't talked about enough.
It's not appreciated enough.
No.
Everyone only wants, but some of the times I can remember when, we would sit and talk. And especially when your rooms were together, there were a lot of times where I was thinking about some things and people said, well, I don't see that. And I wouldn't make the trade. I would look for better levels. So I think that's critical. I think that stuff is so critical because, again, if you're a trader or you're an investor, you have to be in, money is your inventory. Capital is your inventory. And you don't throw away your inventory. You want to be able to open the store the next day. If you're in bankruptcy, you ain't opening the store the next day, and you may have had the highest item in the world. It's just that you were 2 days early.
And if you're early, you're still wrong.
Yeah, it's 100% right. Trust me, that's my life, and you've heard it in real time. There are trades that I see that I'm early. The dollar trade, I was a little early, but it did start from the Schwabel pivot of May 24th and 25th. You can look at, put up a euro chart and you can look at it, not euro dollars, but euro currency.
Same thing with the steepeners that you had on earlier this year. You were a little early with the steepeners, but look how well they worked.
Right. And you know what? But one of the best things was paying attention over that weekend when I exited it, because I listened to Lael Brainerd speak and I said, okay, I'm not going to fight the Fed on this. And I got out at 71, 72 on the 210, and it went right down to 38. And now we're, sitting at 52, 53, but I'm not fighting the Fed. That's a really good test we're going to get, by the way. As the Treasury keeps pumping paper into the market that the Fed is going to have to buy, we have to be very attentive.
Oh, gosh. All right. So I want to ask about that. At what point does that end?
Yes.
Or does it?
I don't know.
The Treasury sitting on a record amount of cash. They keep just dumping all kinds of paper out there.
Right.
The Fed has, so you got the buyers of second to last resort out there scooping up what they can,
Right.
but not much. You got the Fed buying it all.
Right.
So the Treasury is just going to keep issuing, and the Fed is just going to keep buying.
Yeah, well, that's the world in which we live in, man. There's nothing. What are you going to do about it? Now, the test will come, and I was reading some pieces today, okay? The test will come. As they said, what if they got a COVID vaccine, which I'm doubtful, but let's say by October. But unemployment is still 11%. There are some people who think that once a vaccine is there or the numbers drop so dramatically that the Fed will pull back. I'm not buying that. The Fed has signed on that they're concerned about jobs, jobs, jobs. And that's why you may find me a little flip when I say this. The Fed has turned itself into a social justice ministry. Because as long as they are concerned about all of those people, and I'm not locking up with them from a moral standpoint. I must be clear about that. As long as their primary concern is all of those people who lost their jobs through no fault of their own, I'm quoting Jerome Powell, they're going to be concerned about the employment situation and everything else be damned. Until proven otherwise, I'll stay this course.
All right. So the Treasury keeps issuing paper. The Fed keeps buying it. They're social justice now. They're concerned about jobs, jobs, jobs. Does that mean now the government has, now the Treasury has the money to finance the infrastructure projects that will put 15% of America, well, more than that, it'll be a boon to the United States. Get people back to work, start businesses, small, medium, and large, and redistribute wealth in a way that we haven't seen since maybe the Great Depression, since the first, not seen for a long time anyway.
Even if Biden gets elected, I think the first thing you'll see is the full enactment of MMT without any, the Fed will have to go along with it, but I would say Powell's already gone along with it. So that's what you would see. Now, then who becomes, if in a Biden administration, I'm willing to take bets. I want 10-1. And I think Lizzie Warren will be the Secretary of Treasury in a Biden administration.
Oh, I would hope so.
I'll take anybody's bet, but I want 10-1.
Who would be her competition?
Oh God, there's, we might hear about Larry Summers. We'll hear, from some of the Democratic stalwarts of the past who would come to the fore. I don't know.
She's definitely got the experience. She's got the knowledge.
She definitely has the knowledge, but what she has is the she is the greatest devil, according to Wall Street. So it would be a real statement about how Biden's going here.
Oh, that's really interesting.
I just throw that out there.
So then Biden falls into, I don't even know how, oh my God, I can't even imagine that. So Biden accepts or embraces the MMT, and whether or not, well, okay. And then Lizzie, I can see that. And by the way, my statement, hoping that she becomes the Treasury Secretary, is by no means an endorsement of her becoming the Treasury Secretary. It's just that I know that she's got the knowledge and background to be that. Anyway, would be the ramifications of that are just unbelievable. Why is it, Ira? Why is it? This baffles me, and I don't. Taking a step back, why is it do you figure that Congress can't come together, or the White House can't come together in an election year to compromise in order to get this bill done and passed, and get a bill on the president's desk? Is it just purely political?
Yes, it's political, and I think this is just my view, that the Democrats made a mistake. They overplayed a hand here because they thought they could deliver to the big cities a massive package. Because let's face it, these revenues, we ain't seen nothing yet, but state revenues are going to be way below what anybody thought they were ever going to look like.
Yeah.
And this is causing a lot of concern. So the Democrats wanted to undo SALT when Trump went after the blue states by putting in that $10,000 cap. And they thought that they'd be able to get this done. And they pushed hard for it because they wanted massive subsidies to Chicago, New York, Los Angeles, San Francisco. We'll go on and on and on. But the big cities, which is their constituency, and I think they made a grave mistake because they allowed Trump to look like he's the one concerned about Main Street, while the Democrats are concerned about, urban dwellers. And I think it was a great, and Trump was kind of pushed into a corner. He couldn't compromise because there's no way he's giving them that. So he just keeps holding out on issues that he believes, play better to Main Street. I'm concerned about you. I'm not concerned about, this, and this. As he says, these cities and states who, through their irresponsible behavior, have spent themselves into large deficits. I'm not bailing you out. That's not what this COVID relief bill is about. So I think he actually stiffened his stance because he saw that actually plays out. And I think that's the optics of it.
Yeah, I think it is too. No matter how they try to spin it, either side tries to spin it.
Right.
I don't watch much of CNN or Fox. I will spend a few minutes just to see what both sides are saying, but I can't stand too much of it.
No, I'm telling you. And that's why when I saw that CNN had a poll that had them close, I go, wait a minute. How can it? And I don't watch it, but I had people, I can't tell you how many people sent me stuff.
If CNN has them close, and I think they're probably just trying to push people on the left.
They're getting nervous.
Yeah.
The Democrats are no doubt getting nervous because they're going back to Hillary in 2016. And the fact that they said, and a lot of people thought that that she was a lock and stayed away. They don't want that to happen.
No, they can't afford it to. Another 4 years and they might be decimated. And the more that people are standing in the streets, the more that people are out there in the streets in Chicago, Portland, New York, the bigger uptick in crime that we see in all of our major cities. I think that talk about optics, the optics for the left is not going to, it won't bode well, and the more and more taxpayers that leave our cities and the states of like Illinois, like New York, like California,
Right.
people leaving in droves. Where my wife and I have been, Jen and I are looking around the country now. We can put this house up to rent and take off and go someplace.
Yeah.
Our kids are relearning. All I need is an internet hookup.
No. Listen. It's causing a lot of people to reassess.
There isn't a place in the Chicagoland area that I would want to live except for maybe the North Shore or where I'm living on the South Side, but even that,
I think you need a ranch house up north.
How many bedrooms?
How many you need?
4 or 5.
I've got 4.
That's
Because
covered. We're covered.
And all the kids are right off the master bedroom. So, it's a ranch house. So all on one floor with a giant basement. You can, believe me, my son fielded probably 10,000 grounders on that floor, maybe more.
Oh, that's great. Do me a favor though. Just don't throw out all of the articles that you've clipped out for the last 30 years. Let those stay in the house.
I'll leave you all my books.
I'll be out there. We'll make an appointment. Come out and see it.
Hey, I'm gonna tell you what. I live. Kids go to Loyola. I live by a giant church that's a basilica, by the way.
All Saints.
All Saints. I'm 4 blocks away.
Oh my gosh, what a great neighborhood that is.
I'm 4 blocks, and I'm on the Lincolnwood side of Devon, but I'm a block off of Devon. Yesterday when I ran, I was running through Edgebrook, Saugerties.
God, what a great neighborhood. And then you got all of those great Indian restaurants right down Devon.
Well, yeah, I'm not. I ate my favorite Indian restaurants on Milwaukee, 1400 Milwaukee. That's right.
1400. Isn't that Little Poland? Isn't that the Polish area?
Well, it used to be, and that's now Hipsterville.
The man with the golden arm. Isn't that where Frank Sinatra?
Well, Nelson Algren.
Nelson Algren, yeah.
Yeah, Nelson Algren. In fact, I'm right in the middle. I'm reading Humboldt's Gift right now, rereading it. Now I'm wondering, why did I ever think it was a great book, as I'm almost done with it? But
I saw there was a documentary. I think PBS had a documentary on Nelson Algren not long ago. So
yeah. One of my mother's favorite writers, and she was from Humboldt Park. So
yeah, my dad's too. One of my father's favorite writers, which then led into Royko, which then led into.
Oh yeah, I still read Royko.
I do too. I've got all of those books.
Do we miss him? All right, so that takes us up. If any other question, on any day, just send me what you got, and we'll go from there.
You bet. Thank you so much, Ira, for spending so
Thanks,
much time with us and being so
Okay.
gracious. You're the best. Thank you so much.
Bye bye.
Bye bye.